Hi and welcome to another edition of our weekly market outlook report for the week starting Monday the 11th of January. We have just left behind us a volatile trading week and a busy economic calendar which kicked off January 2021 trading activity. We are heading into a slightly quieter week ahead of us, which starts with Chinese consumer price index data for December on Monday. On Tuesday, economic calendar is very light. We should be on the lookout for UK BRC Retail Data. Moving on Wednesday, the Eurozone Industrial production data for November will be followed by US Consumer Price Index data for December and also US Crude Oil Inventories. On Thursday, we should be on the lookout for Chinese trade balance data, which will be followed by US jobless claims and retail sales. The week will finish on Friday with China retail sales and GDP for quarter 4. That will be followed by UK manufacturing production and GDP for November figures. In the afternoon, we should be on the lookout for Michigan consumer sentiment. Now, let's take a look at few markets. Let's start with S&P 500. This appears to be a bullish breakout to the upside. Fairly surprising outcome considering a very bad non-farm payroll number, but unemployment in US stayed at 6.7%. Key trading level going forward is at 3,800. As long as that level holds, bulls are in charge, so pullbacks to that level and a rally or a breakout above these current highs could open the way for the continuation of this upward move, targeting additional resistances at 38.50, 38.80 and higher. These are basically a guessworks because we don't know where the resistances are. We are in uncharted territory and this is all-time high. Alternatively, if we see a dip below 3800 and a retest of that level from underneath, that could open the way for a deeper corrective move, targeting additional support towards this rising support trend line at 37.75, possibly even these lows here at 37.60. German 30 or the DAX index also appears to be very bullish. We had a breakout to the upside and finally a breakout above psychologically important 14,000 level. As long as that level holds, bulls are in charge, potentially opening the way for the continuation of this upward move. Yet again, all-time highs, uncharted territory. Resistances could be at 14,200, 14,300, 14,500 and so on. Alternatively, if we see a dip lower below 14,000 and a retest of that level from underneath, that could indicate some profit taking, which could open the way for a corrective move to the downside, targeting additional support towards the cluster of these previous highs of 4th of January at 13,880, followed by 13,750. Euro dollar bearish consolidation here. This was a corrective pullback. Key trading level going forward is at 1.23. The bulls really need to see a push into 123 and a breakout above that level and an end of day close above 123 for the continuation of this upward move, targeting additional resistances at 123.70, 124, possibly even 125 to the upside. Alternatively, if we see a rally and a rejection or a dip lower and a loss of these current lows at 121.80, a retest of that level from underneath as a newly found resistance, that could open the way for a gradual move lower, targeting additional support at 121.50, possibly even 121. Cable, sterling dollar, corrective pullback here. This is an energy build-up, lower highs, slightly lower lows. It looks like a pennant forming. Key trading level going forward is at 135. As long as that level holds, a pullback to 135 and a breakout or a rally from these areas and a breakout above 136, 136.50 could open the way for a spike higher, targeting additional resistances at 137.70, 138.50, possibly even 140, maybe even 141 over a longer period of time. Alternatively, we see a dip lower and a loss of 135, a retest of that level from underneath as a newly found resistance that could open the way for the retest of these lows down here at 134.30, possibly even 133 to the downside. Dollar Japanese yen clearly downtrending, but we are seeing an oversold bounce back here, therefore US dollar strength. Key trading level is at 104, nice and round number, and also a cluster of these previous lows and highs here. Bears need to engage here for a push lower, targeting additional supports at 103.40, 103, 102.80, 102.50, possibly even 102. Alternatively, if we see a breakout and an end of day close above 104.30, that could create a short squeeze, opening the way for a spike higher, targeting additional resistance at 105, 105.20 to the upside, where the price would meet falling resistance trendline in daily time frame and also fib retracements. Gold, massive corrective pullback. Key trading level for gold was at 1900. That was lost and the price pushed lower. We are coming to some fairly substantial supports at 1830, cluster of these previous lows, and also some moving averages in the higher time frames. As long as that level holds and we see oversold bounce back, then keep an eye on 1880 and 1900. Breakout above 1900 could open the way for a push higher, targeting additional resistances at 1930, possibly even 1945, 1956, 1964. Alternatively, if you see a rally and a rejection or a gradual move lower and a loss of these lows towards 1830, that could open the way for the continuation of this selling pressure, targeting 1800 to the downside. Lastly, let's talk about crude oil. Crude oil had a bullish breakout higher, initially triggered by OPEC meeting and the announcements about production cuts, and then subsequently the price broke through the psychologically important $50 per barrel and moved through 51. So now pullbacks to 51 would be considered to be a retest of major support. So pullback to 51 and a breakout higher would be seen as bullish, potentially targeting additional resistances at 53, 54, possibly even 55 to the upside. Alternatively, if we see a dip lower, loss of 51, retest of that level from underneath as a newly found resistance, that could open the way for a corrective pullback lower and retest of this rising support trend line, moving averages in different higher time frames, targeting support at 49.70, 49.10, possibly even 48 to the downside. Thank you for watching, thank you for listening, stay safe and happy trading. Bye for now.